Hi, my name is Kat. I'm a PMM for Accounts Payable at Payhawk.
And my name is Nicky. I'm the General Manager for Accounts Payable product, and I've been fascinated by challenges on automation when it comes to fintech and how it can actually help finance processes.
Great, thanks so much for joining. So we're here today to talk about accounts payable and why it's still one of the most fragmented and reactive processes in finance. We're talking about this because at Payhawk, we've spoken to dozens of customers, me and Nikki together, to understand the real pain points of finance teams and CFOs. And what became quite clear is that the problem isn't just the invoice processing. So yeah, that's why we don't see AP as software as a standalone invoice tool, but we see it as part of a much bigger procure-to-pay journey. And it gives us a much more holistic perspective on what actually works. So let's dig into that a bit more. We can start with the status quo. So to me, it seems like most AP tools actually start at the invoice when the invoice arrives, and they focus on the capture and the OCR and payment execution. But then finance often have chasing for context and being forced to be quite reactive in terms of control and visibility only after spend has been committed. So we at Payhawk deliberately start earlier at a structured intake, budget context, and approvals before spend happens. Could you please elaborate on that a bit more?
So that's how we actually think about it. It's not just buying a tool or solving a specific part of a small problem, but we tend to think about things in end-to-end life cycles. And we try to kind of see what happens before and then what happens after. And we try to kind of fill in all the gaps in between. And we generally found out that there isn't kind of a good solution that allows you to do this globally, but at the same time, does not put the burden on the employees, meaning that they like the process, they want to collaborate in that process. There isn't kind of something that exists at the moment solving that pain point when it comes to accounts payable.
Great, thank you. So across all the companies that you work with and customers that you spoke to, where does the AP process tend to break first when the organizations scale?
So the most obvious thing, and the thing that you'd read if you go on the most of the companies out there that are offering processes to optimize your spend management and accounts payable, they would say it's the data entry. But the reality, it's the coordination of works. As soon as you kind of pass a certain scale, a certain threshold of invoices that you're processing, you add a few more entities, you start transacting with a little bit more suppliers, there's more departments, the complexity of this rises exponentially. And this is kind of the part that really we see as the thing that breaks first. It's pretty much how you move from a really small process to something that's more mature, more scalable. And it involves many parties along the way. Generally, people would say, okay, you simply buy a tool, you implement that tool, you give full control to the finance team, and job done. You do the POs, you centralize everything. But the reality is that this transition isn't as pixel perfect as people usually imagine it.
Right, so you're saying that it's very centralized. How, in your view, should it actually be?
So in my view, the important bit is that you want to have a global central process, but you want to have a decentral execution. So if you're a company that has offices all over Europe, let's say in France, in Belgium, in Germany, in the UK, you'd want to follow one company policy and have the same set of rules, but allow the local teams on the ground to actually be able to execute without actually having too much of a burden. So there is this notion that you need to be able to adjust to the operations of the ground that the companies are actually doing without actually sacrificing the control and the visibility and the possibility for you to get all those things in a central place. If I can kind of give an analogy, what finance teams are actually looking for is the cockpit of a fighter jet, right? So you want to be in a place that gives you ultimate control to execute everything. But what you're kind of getting as information is coming from the people that are on the ground, and you're actually trying to optimize for them as well.
Right, that makes sense. So then, in your view, where does the control actually start, or where should it start, and how do you make sure that it's done in the right way, like you said?
Well, definitely, if the invoice reaches your finance team and they're surprised, it's already too late, right? So it starts at the very basic sentence, I need to purchase this. And this is the place where the control actually starts. You want to identify the need. You want to be sure that that goes from the right governance and control when it comes to process, the right stakeholders and budget owners are involved in the approval. Everybody's pretty much aligned on what this is solving for the business and how is this actually being transferred from a cost to an asset to the business. Effectively, everybody wants to buy a tool, but if you have a seamless way to simply make sure that you correlate that tool to all the necessary stakeholders and everybody understands the value across the board, then it's much, much clearer why you need to make a certain type of spend. And what we usually see is that a key participant in that is the people that are actually making the purchase. I need to get a subscription to Anthropic. I need to get a subscription to something else. That usually isn't something that's initiated from the finance team. So the key stakeholder is the end user themselves.
Yeah, so it needs to start at initiation for whoever needs something or needs to purchase something. So then how do you make sure that people outside the finance team actually adopt this process in a proper way?
Yeah, if you look at the status quo, we're not solving a rocket science problem. There's a bunch of solutions out there that tell you all you have to do is build a form, and people are going to be using that form. They're going to be inputting the fields. They're going to be requesting all that information in a really nice way so that they're able to actually get that information. But what ends up happening is that if you speak to people, they generally hate those processes. They really hate going into a specific form and starting to input fields. And the reality is that in many cases, they don't actually know whether the information they're inputting is correct, whether they need to provide something else, or what happens next. Maybe there needs to be an additional legal review. Maybe somebody from our IT team needs to double check and cross check this process. So the challenge, again, is related to the coordination of that process. And what we found out and what we know that we can be actually a ton better when it comes to solving that issue is the introduction of the AI agents. And the reality is that it's never going to get simpler than simply typing what you need in a free-form text and then having somebody that's guiding you through the process and making sure that they're doing all the heavy lifting for you. And that's kind of the way that we think about it. It's a great way to make sure that people follow a process in a compliant manner, but they are actually not hindered. They're not obstructed of actually going through that process because somebody is actually helping them. So it's a win-win. Finance teams feel much more in control because they don't feel like they're doing post-mortems on different types of situations. Why is this invoice purchased? And then employees feel much, much better because they simply say, hey, I need to get this. And they have a really friendly way to interact with the finance teams as well.
Right, that makes sense. So conversational AI basically is what makes the whole process much easier for the person who needs to request something. And then on the other side, there's finance who still has control, but then they also don't have people asking questions all the time on what they need to do and who they need to ask and what the policy is, basically.
Exactly, because that's all taken care of.
Nice. That makes sense. So I know you talked a lot about orchestration versus automation. Could you explain a bit more about how that affects the AP process?
Well, when you say automation, it pretty much implies that you're focusing on one specific task that you're trying to automate. You're trying to automate the data entry. You're trying to automate the approvals. You're trying to automate a bunch of different steps in the process. When we use this word orchestration, and what we actually imply is that this is the end-to-end journey of how everything works together in one coherent process that everybody understands. It's all bread and butter when it comes to submitting, approving, paying, and then reconciling in your bank account. And the way that we're kind of thinking about this is that this is a linkage between the different departments, the different steps in the automation process. So you get one end-to-end life cycle of a single purchase, starting from the request all the way back to the reconciliation of the bank statement. And how those things are actually connected, this is what we mean by when we say orchestration.
That makes sense. Thanks for elaborating on that. If we look at this whole end-to-end process of orchestration, what is like the main big hidden cost in modern AP that rarely shows up in ROI models?
That's a great question. Usually, what you end up seeing we speak with a lot of CFOs, head of finance, and when we kind of speak with them, what they say is the manual labor that they have to put in, the teams, the controllers, all the people that are involved in that process. But the reality is that nobody actually points out the hidden cost of how is this wasting time and resources when it comes to senior level management, the head of finance, the CFO. Usually those things that are not within policy, usually those things that are coming without a specific approval would get escalated straight to them. And we find out that those people generally are distracted from actually adding value and understanding how to serve their customers better into mundane tasks like this that would then mean chase who actually purchased that, why was this purchased in the first place. So they're kind of switching from this proactive manner of how to build the business and how to serve the customers better into a reactive fashion, and they're kind of doing the autopsy of the spend. They're trying to understand what happened after it happened, and I think in my view that's kind of the biggest cost, because at this point you're simply sunk cost. There are things that you cannot do anything. You cannot change the decision. You're already with a contract with a supplier. You need to pay the invoice, and maybe you know that you don't need this invoice in the first place. Maybe you don't need this contract in the first place, but it's already too late. So it's kind of a double-sided loss when it comes to this. You're wasting time, nothing you can do about it, and it fundamentally shifts the focus of the organization.
Yeah, that makes sense. So like the aftermath will always be much more time consuming and sometimes even irreversible or leading to much more work, also senior finance people. And by avoiding it or preventing it and being proactive about it, you just avoid it altogether. Great. So then on to the next question. Why is it important to have a tool that's user-friendly and intuitive for like non-finance people?
Well, effectively, I'll probably take a little bit of a segue on this one, but if you look the rise of ERPs, I'm a big fan of history, and if you look at the rise of the ERPs, there was this notion that back in the 90s, everybody was like, hey, there's like this beautiful system that you can put all the data, and once you put everything inside of it, it's going to give you the actual state, the snapshot of the business. It has the balance sheet, it has the income statement. At the same time, it also has what are we doing as an organization to move the needle. And this was a great revolution. But the reality that then turned out is that you had a bunch of other companies that actually started popping up. And those companies were doing small extensions here and there. They were going to build an app that integrates with that ERP. And fast forward till today, the main reason for that is the user experience. Usually, finance people are very savvy when it comes to numbers. They're very pedantic and they're very diligent when it comes to that. And they like to work in systems and operate in systems. But often their job is to be collaborating with other stakeholders as well. Legal, marketing, sales, R&D, and so on. And when it comes to involving all those stakeholders in a collaborative fashion, what usually you want to do is you want to drive good behavior. So you want them to submit their receipts on time. You want them to actually go through the process of purchasing something. The procurement officer would be super happy if everybody follows the process. But how do you actually make this and actually enforce it? Do you use the carrot or the stick? Right? And in many cases, the perception is that people have to use the stick because this is the best possible way to go ahead and do it. And our bet on that is if we build a software that's good enough that people actually like using, that people understand the value that it's helping them get through the process, it actually allows for a much faster and much better business partnering between finance and the different stakeholders. So I would say that being obsessed with the experience of the end user is just as critical as making sure that the bank account reconciles, making sure that the data entry is correct, and making sure that all the approvals are inside the system.
Yeah, that makes sense. So it almost feels like it also benefits the person who requested or anyone else who's working with finance, and everything's quite intuitive. And it's not like something that you would not look forward to doing. Let's say that just feels very intuitive, natural. Nice. Then going on to the next question. So what's the difference between an AP process that works today and one that can be trusted at scale across entities, geographies, and teams?
Well, I would say that probably the one thing that really fractures an AP process is the international expansion. So when you look at businesses, if you have a process that works for 100 people that are operating in one country, chances are if you move to 1,000 people organization that's operating across 5 different countries, the process fundamentally you'd want to keep the same. You'd want to have the same principles. You'd want to have the proactiveness, the controls, the possibility to have all that information in real time. The challenge then becomes, how do you actually deploy that? And I mentioned this previously. You want to have a global process, but with local execution. And that's pretty much where it becomes difficult. Because in different countries, you may end up using different accounting systems, different ERPs. In certain aspects, you may actually need to open different bank accounts if you do not have a provider that's giving you the right capabilities in place. And an AP process that works is one that actually scales with you, that's able to serve the right geographies in which you're working, but at the same time gives you that central visibility of what's happening and gives you that central control of everything inside your organization, without actually being different from country to country, from system to system, and so on. And for me, the biggest difference is, can the tool that I'm working on actually cover my international expansion needs? That's pretty much the main thing that usually would end up making you start to think, okay, maybe we need to upgrade the systems that we're using. Maybe we need to change some of the relationships that we're having with the banks.
So basically, it sounds like having a multi-entity tool that allows you to scale properly, allows you to have like controls that apply to all your entities, but also allow you to customize to specific entities if you needed to, without like, it's still an efficient way. And also still to adhere to like local laws, for example, like e-invoicing, which mandates are like rolling out through European countries. So having like the best combination of both worlds. Is that right?
Absolutely. That's exactly what you need. You need a global overview and the possibility to enforce a global policy, but to be able to actually cater to all the regional differences in this place. In some countries, maybe there's a mandate for invoicing, such as the one that we have for Belgium. Now, I think as of February right now, Poland, and later this year in France. But if your tool does not cover all of that, then you kind of end up in the reality that you need to get another tool that's able to do part of that, but at the same time be able to kind of fit within the existing process that you're having without actually making any fundamental changes. And it's the same with the bank accounts. Maybe you need to do international transfers. Maybe you need local currency rails. And all those aspects that sound like operational decisions actually are big obstacles to actually scale the process globally and have one process that's versatile and allows you to actually focus on the more important bits. Because the reality is that you want to have something that's working, it's sorted, and you don't want to change it. And that's what I think is causing a lot of people to always be looking for something else, because they're either outgrowing the tools or new requirements are changing the landscape in which they operate.
Yeah. And another important one, your expertise, ERPs, that you can allow also every entity to connect with every kind of ERP that you use, if you use different ones for different regions.
That's very key. And that's something that we see, especially with rapidly growing companies. Usually they would not be using an ERP that's able to cater all their needs, because they're probably not at the stage that this makes sense. And they'll be using local integrations. Let's say if you're a French entity, most probably you're going to be using Penny Lane. If you're in the UK, maybe you're going to be using Xero. And the desire to actually consolidate all that in a central tool that would allow you to do, let's say, a group reporting would naturally come a little bit later. It would be a concern that you'd want to postpone as much as possible, because it comes with a lot of overhead, a lot of cost, and then a lot of resources, both time and money internally, that you need to spend in order to get that up and running. And that's why having an orchestration layer that's able to connect all those dots together, but at the same time allow you to continue scaling the process that you're having is super critical, because it gives you the necessary power to actually execute on those things with confidence, that you don't have to buy a new tool every single year.
Nice, that makes sense. I just want to dive into one more topic on budget visibility. So you mentioned having everything in one place obviously has benefits, but what benefits really come from real-time budget utilization versus like end-of-month assessment on the AP process? Like, what are the biggest factors that make forecasts inaccurate?
I can actually sum it up with my favorite word: accountability. It all boils down to this. How does this actually work in a traditional company? You're usually going to distribute budgets, and they're going to have budget owners. And what ends up happening is either your FP&A or finance team, they become, in a way, reporters that are broadcasting that information to the budget owners on a regular basis, or they're being chased, am I in budget or out of budget? Or you need to give them the option to be able to actually control that. And by having a tool that's able to give them real-time visibility at the moment the request comes in the system, I need to purchase, let's say, Anthropic licenses for our new quad desktop, and it's 2,000 euro. And if they're able to see exactly at this point in time, how is this impacting their budget, whether that's above the budget or whether that's actually quite under, makes a huge difference within the accountability of those people, because you right now know that they have all of the information to make the right decision. Whereas previously, what ends up happening is this simply creates another friction point between finance and the budget owners, because they'll say, hey, I didn't know that was above budget because I got the report a little bit later. And you're kind of removing that obstacle and putting full accountability on the budget owner simply by giving them all the data in real time.
Yeah. Nice, perfect. Then on to the last question. How can AP team really set really smart accounts payable goals? So for example, cost per invoice, cycle time, maybe accuracy, which metrics should be tracked really and measured for progress?
Of course, you mentioned a few of which I would classify as health metrics. They're really important. I mean, how much is the underlying cost of serving an invoice? And that usually involves calculating the tools that you're using and being able to distribute the right amounts to them, also the time that people are spending. But usually such calculations do end up becoming quite difficult, especially for larger organizations, because you need to have a very detailed breakdown. And what I would recommend is definitely people to focus onto the approval lifecycle. This is one of the metrics that really gives you a nice indication how many things are actually being approved within a specific time period. Having that is a great predictor of knowing where you can kind of expect any issues. And when you combine that with the full invoice lifecycle, from the proactive approval of that invoice, that would be a request, all the way back to the reconciliation, and having a tool that's able to give you the different breakdowns and the bottlenecks in those different processes is actually the holy grail of AP when you think about AP automation. And the other bit, obviously, that we need to be able to think about is related towards the actual payments themselves, running the payment runs, the cost of the transactions. How are we doing those transactions? Are we relying on Swift and we're paying extra fees for that? Or is there a way for us to actually optimize our payment operations? And that's the other aspect of which I'm looking. It's the end-to-end life cycle of an invoice, starting all the way from the request to the approval to the actual reconciliation. And on the other one, the cost mechanism. Is there something that we can actually do that can optimize our payment, which would make it cheaper, faster, and more reliable? Those are kind of the two things that I will be looking at. How are those things captured? And maybe the last one, which is a very exotic, and many finance people and usually head of finance would not put it in their top 3 picks, would be what's kind of the employee experience. Because if employees actually enjoy using the process, and for them it's an experience that does not actually cause any friction, chances are that they're going to be much more involved and submitting things on time, providing all the right information on time. And those are kind of the things that I really think that move the needle. And obviously to to that aspect of what's kind of the user experience or how do people actually think, there's this metric that we really discuss and we speak with a lot of finance people. Is there kind of a zero-touch month end? Is there kind of a zero-touch approval process? How close can we actually get to that? And this, I think, encapsulates all those things before that. Can we actually have a zero-touch end-to-end lifecycle, and which are the bottlenecks related to that?
Yeah, that makes total sense. Last bit that you said on the user experience also ties back again to the cycle, as in like the cycle time also obviously within that is also the back and forth that's needed to really go through the process. So like obviously with this whole orchestration bit that we talked about earlier, all the information should be at whatever person's disposal whenever whatever their position is within the life cycle of AP, let's say. So if all the information is there, then they don't need to also ask questions back to finance and like go back and forth, which will then again obviously extend cycle time. So that makes sense. And same for the payments. Yeah, we heard that a lot, as in a lot of finance people are not really aware of what they're paying for their transfer costs, for their FX, and it's quite hidden oftentimes. So I think it's also where it's also what Payhawk really values, that we're very transparent about the cost, and I think it's very important in the landscape that we live in. Great. Thanks so much for your time, and had a great conversation, and thank you.
Likewise. Thank you very much, Kat, for that insightful conversation.
Thank you. Bye-bye.